Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for the wrap-up of Wednesday, the 16th of October, 2019, and we're now sitting here at just about 3 p.m. Central Daylight Time. So as we come into the market, another down day in the corn and beans. Now, the corn market, we're getting different associations fretting over the biofuel program that the president hasn't fully announced yet, but waivers seem to be in it, and farmers are not that happy from what I'm seeing. In beans, we're getting some harvest. We haven't heard too much about damage. Remember, we had the Columbus Day, and we're trying to get a handle on how far the harvest is, where we're at, and what we're looking at there. Stock market today, very quiet. Metal markets, a small up day, nothing to talk about. And we're looking at the dollar a bit lower and the British pound up, but we still don't know where Brexit is. So let's go and see what's going on in beans. For the week, we're so far down 8 cents. The market is settled back, as you can see right here. The bias is still up. Support's still about 40 cents under the market if you go back to that 18-week average of closes. As you can see on this particular chart, the market's now in the second day of a correction that peaked out at 945.5, and suddenly we're about 20 cents lower in round figures. The market's trend is still up with higher lows, higher highs, but we are getting a reaction to the downside. We've had a bullish crossover in prices. Now let's get to that and take a look. It did not happen on Tuesday. It happened today. So it doesn't mean immediately you make a run back to the highs, but it's certainly a sign that there's bullishness going on in the market. I wish that for a real bull market, you had the shorter term average, the 100, and a line up here where the 100 was over the 200 and then the 18 over both of them in a sequence, but you're not. Support way back at the 913 to 910.5 zone. You can see that you were running the upper Bollinger Bands, and for the past 2 trading days now, we've been backing off from that, and momentum lost its embedded reading. Now, when you lose an embedded reading, immediately you have to get it back when the next trade session comes, or the odds strongly favor that price and the 18-day average are going to make a run at each other. Now, this 18-day average has been moving up at about 3 cents a day, as you could see. So I'm going to look for that number to be around the 916 level tomorrow if you're looking for a reference point. And from where you're at, that's still pretty far away. It's 16 cents away. So if this market re-embeds, this becomes a bit of a bear trap. Then you're looking to see, can you get back up to the Bollinger Band top? In terms of where the market fought a battle, past tense, you can see in the meal you were fighting at the 100-day average of closes, and with the action today, this is today's action, you have sliced through past support, and you're now coming down into that, what I call that line in the sand, that 18-day average for your look-see. The market never did embed, it was just overbought, so you're getting a correction here. And as meal breaks off and you get oil that starts finding support, and today's no different. Oil market up 1 tick. It doesn't always work that way. But when you get these events, you can pretty well take a look and have a feel. The word is feel. You've been against the upper Bollinger Band. Why would the oil run here if the other 2 parts of the crush are breaking down? Do I look for a big break? Well, that's not what the chart is saying. The chart is saying it's still in an uptrend at a resistance point and overbought. When we come to the corn market, we have not been trending. Yes, I realize we've had a nice advance in the market. We also have been running that upper Bollinger Band for about a week and a half or so, and now the market seems to be trying to make a comeback to the 18-day average of closes, that line in the sand, to work off an overbought condition. This market's been overbought for a while. Seeing that number hit, no surprise to me at all. Also harvest time, so why not get more supply onto the market? And it tells me that the farmer's probably doing some selling if they want to get rid of storage area. And a new crop coming in, get rid of your old crop. Higher lows, higher highs in the wheat. I'd be a little cautious here. If the market takes out yesterday's low, which was 504.25. Today's low was 504.5. You could end up with lower highs, lower lows, first into the support of this 100-day average, as you can see. And if that gives ground, well, then the the 18-day average becomes a zone. But here's what would bother me. You change the pattern to lower highs, lower lows if that occurred. You're overbought, not comfortable on that. In the sugar market, what did I say yesterday? And let's go to yesterday. This market's been whipping traders back and forth with no follow-through. And when that occurs, sometimes you just got to walk away from the market because you're not getting anything. Now, with yesterday's action, I would have had this arrow pointing up, I'm sure I did, and saying you've got higher lows, higher highs. What you don't want to take out is this low today on Wednesday, which it did. That puts into play price and the lower Bollinger Band making a run for each other. And so far, I would say you've just unleashed a bull trap where you caught people thinking you had a breakout and the market's going to the downside. You're probably going to be quickly into oversold territory if you hit that Bollinger Band, but we'll see tomorrow. Coffee market, I still say void of what I can define as a swing line trend. When the market had this outside day up, and I'm pointing it to you right there, and it hit the 100-day average, and then the next day broke through that low, that was it. That market sprung a bull trap similar to sugar, and the market coming down like that. I'm not saying the same pattern in sugar, but it's the same play. In the cocoa market, you have a market that's suddenly making lower highs and higher lows. Be cautious of that. It's also respecting the upper Bollinger Band. It hasn't hit the lower Bollinger Band in a very long period of time. The bias is up. The trend is up, as defined by the swing line. The legacy is still to the upside. I would be zero surprised if you get to that 18-day average again. And the market, well, it's knocking on the door of trying to get overbought if it rallies to that upper Bollinger Band. Intraday, it would probably be overbought. In the cotton market, we had this one big up day, as you can see right here. And the market gave up all those gains, and since then it made a run at the lower Bollinger Band, had a bounce today back to the upper, it made a run to the 18-day average today back to that Bollinger Band, and it's really starting to do more trading against this 100-day average in that Bollinger Band than anything. The harvest is underway to a degree here. We've got higher lows, higher highs. Obviously, this market and some of the other grains are all looking at the U.S.-Chinese trade deal, and every time we turn around, there's another piece of news in it that I don't think is friendly, but we'll see where you go. Cattle still very much in this bull trend, embedded reading. As I said yesterday, when you have an embedded reading, you're looking for the trade to be buyers on the break and try to drive it back to the upper Bollinger Band. Today's high 114.20. When you round this one, 114.27.5 was the upper Bollinger Band. You're close. And where did you go back to in the feeder? Same thing, embedded reading, fell back, up. So, until this market in the feeders takes out today's low, still friendly. But what if you take out that low? Well, you'd have that outside day down, which says price and the 18-day average could make a run at each other, but that really gets overridden by the hierarchy of the importance of the slow stochastic. It's the number one hierarchy when it's embedded on a chart. In the hog market, the market just keeps hanging here, but notice how the 18-day average and the 100 are zoning in on each other. That hasn't happened in a long time. Look at how far apart they were through here, and when you had a crossover, I'd have to go far back on the chart, back to here. That's when the market stayed under that 100, and all of a sudden, it's doing its darn best, the first time in a long time, to stay over it. It's probably a lot of traders trying to come to the idea that what you're getting here is the possibility of a lot of pork purchases from China, and I think you're seeing that to a degree in these prices. I can also make another argument. Get ready for this one. A shoulder, forming another shoulder, and a possible inverted head. And if you have our futures trading kit, you get all these patterns. And if this market starts breaking out to the upside, you got to be careful. You measure from the peak here to the valley here. And that could be the distance when you flip over the chart as to where it might go. Now, I don't know if it'll be the D's contract, but you'd be looking at other contracts with it. This pattern's interesting. It's bullish at this point. You got higher lows, higher highs. It is overbought, and it's challenging support levels on pullbacks. One of the things we do here is, being a commodity firm, we handle commercial business, we're handling farm business, obviously, we're handling speculators, and we've put together our QT Market Center. Now, you can set this up for the different versions you'd want. Now, what do I mean by that? If you're a farmer, if you're speculating in the grains, maybe you don't want to know what the stock indices are and all are doing. So you set your streaming quotes up where you can do it. What makes our version so different than others is, number one, voice commands. You don't have to sit here and type away. You can ask it for your quote list and so on. Number two, I'm older. I have to be able to read these things. When you go to so many of the new ones that are out there, our competitors, there's these little lines. I wish you the best in reading them. I can mount this wherever I want. It could be in a car or whatever. As it's voice activated, it's telling me what's going on. It's giving me the quotes as I want to. If I wanted to look over, I don't recommend it. Why not just listen to them as you're driving? Here, you watch my videos. Anyone watching this is obviously on one of them. They play right in here. And if you have this version, I put out a push notification each time these videos are ready. Not a text, doesn't cost you. You just hit the notification. It'll open up right on your phone, play it right through the QT Center, and away you go. What about our other news? And I'm talking the news that we write for our clients and so on. Comes through here. This is the traditional way of looking at quotes, and we have it. So if you're used to this and you want more, we absolutely have it. I just prefer the other one because it's so easy to see. And given that I have this in my pocket or my hand probably half the day as I'm walking around the office or so on, I use it. How do you get it? Go to our website. You can either go to our Futures Kit or one of our other free offers. It's there. Click it on, and when you go to our website, you'll see Ira's free offers. Do that. My staff can get you hooked up like this because you are going to need a user ID and password, and they'll give it to you. Just give them a call. If you sign up online, we'll make sure you get it by email as well. You can always click up here to get there as well. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.